Growth platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Good afternoon. Thanks for tuning in. You're watching Ask PQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
And I'm Alex Matthew. Good afternoon to all of you. This is the one-stop shop for all of your equity-related queries. And you can send those queries to us in a number of ways. You can write to us on Twitter and on Facebook, also on YouTube. And we also love live callers, so you can call us on 022-4540-4141. Alternatively, you can mail us at askpq@bloombergquint.com. Just add the Ask PQ hashtag. We'll take as many queries as possible, so do keep them coming in. Our two experts of the day are Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stockbrokers. They're here to answer all of your queries today. Welcome to the show, gentlemen.
Okay, but before we get to the individual queries, here's a quick look as to what's happening with the markets. It's been a great start to this week. Last week, we were up almost 2% for Nifty. And right now, we're inching very closer to the mark of 10,400. So good going there. In fact, the Bank Nifty has reclaimed the 25,000 mark in today's session. Remember, the recovery in Bank Nifty in the last 6 to 7 trading session has already been about closer to 1,200 points. 25,051 is the level where Bank Nifty currently trades. But I want to pull up the intraday chart of the Nifty PSU Banking Index, where there was a lot of short covering that was seen in last week's session. In fact, today also at one point of time, it was up nearly 1%. But towards just in the last half an hour to 1 hour, there was some selling seen. But right now, it is back in the green. That's the Nifty PSU Banking Index. The other index, which is trading weak, is the Nifty IT pack. In fact, remember, Infosys, the heavyweight on Nifty IT as well as Nifty, will be declaring its numbers this week. So ahead of that, there is some bit of nervousness, or rather call it weakness seen. Infosys is down 1.5%. So earnings this week are actually Infosys and also IndusInd Bank. Let's just pull up both the counters. Infi, as you've already seen, is down 1.5%. But IndusInd Bank has had a great start. That's trading with gains of 2%. In fact, that's almost trading around the day's high mark. Pull up the Nifty contributors. That's going to give you a clear picture as to which are the stocks that are contributing to the gains in today's session. So your heavyweights feature there: ITC, HDFC Twins, which together hold nearly 16% weightage, and IndusInd Bank. Well, what's capping the moves on the upside is Infosys. ICICI Bank has been weak right from the word go in the opening session. Z is also trading a little bit weak in today's trade. Which are the pockets which are doing well among the Nifty constituents? The oil marketing companies were up on Friday's session, and well, the rally continues once again. So BPCL up almost 4%, HPCL up 4%. Indian Oil is also seeing good gains of nearly over 3%. The broader markets also trading in the positive territory. However, it seems like it's the benchmarks which are outperforming today. So pull up the Nifty mid cap and the small cap index. You'll see the gains that we've seen for the broader markets in today's session. Last when I checked, the index was up. Now, right now, it's up nearly 0.3%. And the advanced decline ratio will give you a clear picture as to what's happening with the broader spectrum of the market. So it's still in favor of the advances. So advanced decline ratio is looking good. It's almost 2:1. Some of the other gainers from the broader markets are the likes of Datamatics. Ruby Mills is doing pretty well in today's session, and also a company like Power Mesh Projects that's registered its fresh 52-week high in today's session. So watch out for this one. In fact, the delivery, the volumes have been quite high. Power Mesh has actually given up its gains. Actually, it's down now. From its off day's high, it's up only 1.2%. Fresh highs seen for Titan, the company which is doing pretty well, outperforming. They came up with the release of how the performance of the Q4 has been, and clearly they seem to be enthused and they're quite satisfactory with the performance that they've seen across the verticals. In fact, Morgan Stanley has maintained their overweight rating with the target price of 1,050. Just want to highlight a couple of losers before I hand over to Alex. A couple of the futures and options losers rather. Just Style, Dalmia Bharat, as well as stocks like PTC India have seen cuts of between 2 to 3% so far.
All right, Navneet, that's the picture of how it looks right now in the markets. And you, in fact, spoke about the banks and the recovery that they've seen in the recent past. Our first query relates to the banking space. Akash Kumar writes to us on YouTube. He has 1,000 shares of Federal Bank that he bought at 110 rupees with a long-term view. He wants to know if he should average at current levels. Now, speaking about Federal Bank, it's still down about 11.3% for the year. But if you look at the performance over the last month or so, it's up about 2.8%. I'm going to Parthiv with this query. Parthiv, the query is on Federal Bank, and the investor is asking whether he should average at this point. What's your view on the stock in the long term?
Yes, we're very bullish on this name. One thing that we're playing on for the banking sector is a lot of market share transition from the PSU banks to the private sector banks. And even in private sector banks, whether we talk about banks of the size of Federal Bank, which is like a mid-sized private sector bank, which is, I think, growing its advances quite well. The yield on the advances is quite respectable. And I think definitely this bank will tend to do well. The management was quite upbeat in terms of growing the advances, growing the ROEs, and also trying to maintain the cost-to-income ratio. And overall, if we see the asset quality, I think has been stable except for the last quarter, where there was some increase in spike in the slippages. But that is not a trend that we expect to be continued in a bank like Federal Bank. So I think this quarter should be reasonably good, and I think this market share increasing, and banks like Federal Bank, which are relatively well capitalized in terms of the capital adequacy ratio, I think are the ones which will definitely benefit. So I think it's down around 11-12 rupees from the purchase price. So I do believe that yes, I think you can cost average here and hold on for the next 2 to 3 years. This bank will definitely tend to outperform.
Okay, that's the view on Federal Bank. Let's move on to our next query of the day, and this one comes from Bhavesh, who has written to us on Twitter. He wants to invest in Parag Milk Foods with a 6-month view, and he wants to know if it is advisable to enter into this counter at current levels, where Parag Milk Foods is trading somewhere about 247 on YTD basis. It has lost nearly 15 to 16%. Amit, I'm going to come to you. How are the charts looking for Parag Milk Foods? If somebody wants to take a bet, from the next 6-month perspective, what would you advise them to do?
I would say that overall, looking at the charts are clearly displaying some sideways movement, be it the long-term or the medium-term charts. But at the same time, the stock has corrected from almost 320 levels since the first week of January, currently trading around 248, 250 levels. But what we see technically on the charts is around 225, 230, 35. That's a very strong support zone. So any pullback towards 225, 235, that can be used as a buying opportunity from a 6 months perspective, with a stop loss below 200 and a target somewhere in the region of 265 to 275 on the upside.
All right, that's the view coming in on Parag Milk Foods. Let's talk about the next query. In fact, Dheeraj Agarwal writes to us on Facebook. He has 450 shares of AB Capital that he bought at 194 rupees with a long-term view. Dheeraj wants to know what he should do with his investment. So it's a recent listing relatively. It was listed in September of last year. The performance of the stock so far this year has not been great, in the sense that it has fallen about 14% so far this year, but it's a diversified financial services play. Parthiv, what's the view here? He's got a long-term view, so I'm guessing that recent correction notwithstanding, he should hold on. Is that the view?
Yes, absolutely. I think it's a quality fundraising, and rather I would even suggest, if possible, the viewer can also try and cost average out here, because at around 147 levels is the level Singh bought his stake, almost 3.5% type of a stake, even before the stock got segregated and listed. But not only that, I think all the business verticals are doing extremely good. Yes, I think the stock, ever since the demerger and the listing, has seen a lot of selling pressure, and it went right to low levels of around 144. But the stock has slightly recovered from there, and thanks to the yields, which have cooled off. But even without that, I feel that they have a fantastic secured NBFC book, which is growing at a staggering pace. Their yields are very good. All the other businesses, whether we talk of the insurance business, they're also going to start the ARC business. Even the AMC business, I think, is gaining very good market share, and I think it's a quite respectable position. And I think these are the type of businesses which will generate a lot of income for the shareholders. And I think we are moving from physical asset saving to a financial services base. So such companies will tend to gain market share and tend to have a very high growth trajectory. So I think AB Capital is something that over the next 3 to 5 years we are quite upbeat on.
Okay, so from a longer term perspective, Parthiv says one can look to hold on to something like AB Capital, which I remember the price discovery when it was getting listed was around the levels of 200 and 205, and from thereabouts there has been some selling pressure. A lot of the analysts on the street had cited concerns with regard to higher valuations for this one. Well, we're getting a lot of your live queries on our social media platforms. I'm going to go across to Shubham Mahajan's query. He writes to us on Facebook. He's asking, should Infosys be bought at current levels? What are the future projections? So can it be bought at current levels? I'm going to take this query to Amar. Remember, I just highlighted at the start of the show, the earnings come out this week, and ahead of that, we've seen some bit of weakness coming in for Infosys, which is right now trading with cuts of 1.5%. Amar, first of all, apologies for misspelling your names, what's the view on Infosys when you look at the company technically? Because IT stocks this year have been outperforming. Would you suggest somebody to take a fresh bet, considering the earnings are lined up this week, which also means there could be a lot of volatility ahead of the numbers?
Yeah, that's true that we are definitely going to see volatility in Infosys stock. And also technically looking at the stock, we had witnessed a sharp run-up in Infosys from almost 900 levels to 1200 levels. And currently it's around 1100 odd levels or so. But from a short-term perspective, the stock remains in a downtrend. So the stock can trade further lower. Where we see strong support for Infosys is somewhere around 1050, 1060 odd levels. So I would not suggest that this is a good time to buy Infosys. Yes, any further correction, as I said, about 160, 150, that's a very good strong support zone. Because technically it's strong on the long-term charts, but on the medium-term as well as the short-term charts, it's clearly displaying that there is selling pressure. Any pullback is being used as a profit-booking opportunity. So I would suggest that the investor should wait for the stock before the results and then take a position.
All right, that's a view coming in on Infosys. Let's take the next query. In fact, it's an interesting one, Navneet, because it's talking about a listing that took place today. Venkat Sai writes in on YouTube asking about Lemon Tree Hotels. He wants to know actually what both the long-term and short-term views are on this particular stock. Remember, it has listed today. It's up about 15%. It's doing well in trade today. I'm going to take the query to Parthiv. Parthiv, what's the view here on Lemon Tree Hotels? He wants to know both in terms of long-term horizon as well as the short-term horizon, what the view is.
See, for the long-term horizon, I think it's a fantastic business model. And as the management continuously reiterates that, they are at an inflection point in terms of all the budget properties that they have in place. And plus, I think the pricing power which is going up, which will lead to fantastic operating leverage. But I think at the IPO price band, I think the valuations were defying the gravity. Yet, I think to our surprise, the stock has done extremely well on the IPO listing day. And maybe I think probably the market is in the mood to factor in a lot of futuristic growth. But I think from here, I still feel that we are not very comfortable with the expensive valuations. I would be more comfortable once I think the stock goes down at least 5%, 10% lower to the IPO price band. Because I think if I have to compare this company with a lot of its hotel peers, the valuations are extremely stretched. No doubt, I think we should wait for upcoming results. If the results tend to improve fantastically vis-a-vis their past, because the return on capital employed of the past in this hotel business has not been very great. But now if they can improve on the performance and even show better margins, I think then maybe the street was something which is trying to factor in right now. But I think at current levels, according to me, it's very expensive. Someone who has got the shares in the IPO can hang on to it. But I think new entry at this levels, I think I'm not very comfortable advocating that.
Okay, so new entry into Lemon Tree is not recommended. That's what Parthiv is suggesting. And let's just say it's a decent listing because a lot of, as Parthiv already highlighted about the valuations, a lot of the analysts on the street was expecting a tepid listing for a Lemon Tree. The issue price was somewhere about 56. And the subscription numbers at a time when a lot of these issues have been garnering good response. And here the subscription was only about 1.1. That's about Lemon Tree Hotels, new kid on the block, trading with gains of 14 to 15%. Let's take our next query. That one comes on YouTube. Harsh Kumar writes to us. He's bought 150 shares of Sun Pharma at a price of 497 and 120 shares of Yes Bank at a price of 294. He's asking if he can hold up to 1 to 2 years. Parthiv, I'm going to come back to you. 497. I don't know why that psychological level of Sun Pharma 500. A lot of these retail investors want to buy into this company counter as and when it touches 500 or slips below that. So he's in the money right now, and so is the case for Yes Bank, which he bought at about 294. I think the current price of Yes Bank is somewhere about 315. Would you advise somebody to hold these two stocks in their portfolio if they have a time horizon of next 2 years?
See, at least for Sun Pharma, I can say that FY18 is going to be a very, very tough year. And probably that is something what market is already aware of and already factoring into the price. But I think come FY19, we know for the fact that Sun Pharma has done a lot of inorganic acquisitions for the specialty pipeline. And from FY19, we're expecting some of the specialty pipeline to pan out. And from FY20 onwards, we'll again see the revival in the revenue growth and the margin growth and overall volume growth. So I think in Sun Pharma, one will have to be patient. And I do believe that this stock might time correct longer than one envisages, despite the fact that we know that Halol plant clearance is definitely a trigger which can help the stock and the sentiments. But I think Halol plant is also taking a little longer than one had thought. So yes, you are absolutely right. This near 500 level is a psychological mark where the stock always from these levels have always bounced by 100, 150 rupees and then again cooled off. So I think the entry point is not bad. And if one has a 2-year view from here at these entry points, I believe one should hold on, because after 2 years, even if the stock hovers somewhere around 650, 700 levels, that would be fantastic returns for the 2-year time horizon. Talking about Yes Bank, I think this bank did correct, especially after the RBI talked about the divergences in terms of the NPS that the bank was reporting vis-a-vis what RBI was talking of. But I think the stock did correct, and after which I think the quarterly performance had some inch up in the asset quality. We are not very comfortable. I would rather wait down for this bank to report numbers and see how the asset quality pans out, because we have seen in these banks that as and when, no doubt they are fantastic franchisees, the fee-based income, NIMs and all are very good, but if at all they tend to deviate from their past track record of the NPA performance, then the stock tends to derate. So in that case, I think I would wait out for the quarterly numbers. But in the private sector banks, I think we are very comfortable with Federal Bank, RBL Bank. These are the names which I believe can do extremely well over the next 3 to 5 years.
All right, that's a view on Sun Pharma and Yes Bank. Yes Bank, in fact, up 0.5% in trade today. The next query is on YouTube from Shivani Dhanuka, who has bought shares of BEPL at 180, so Bhansali Engineering Polymers. That particular stock has done pretty well over the past few months or so. So far this year, it's up about 14%. Shivani is asking whether she should hold or exit from this point. And she also wants to know whether she can enter DHFL at the current levels. So, Amar, what's the view on the near term with regard to Bhansali? Is it likely to see an upside in the near term? And also, is it a decent level for a Diwan Housing Finance, which is currently at 537, to enter the stock at this current price?
Yeah, first I'll talk about Bhansali Engineering. What we are witnessing is that technically the stock is very strong. I would say one of the strongest charts that I've seen is it's very strong on the charts technically. So she should definitely hold on to this position. The stock was consolidating for the last couple of weeks, but it's breached the 205, 208 resistance level. So, and currently it's trading around 215, 216 level. So, if this level is sustained, the stock, I would say, trades above 200 level as well. She should definitely hold on to the position, because the stock has formed a very strong support base around 180 levels. So, ideally, she should hold the stock, but she should also remember that the stock is likely to witness extreme volatility because it's trading at record levels. But yes, she can do two things. One, she can book profits in 50% of the trade, and balance of the trade she should hold with the stop loss below 180. As far as DHFL is concerned, what we are seeing in DHFL is that this stock, technically it's strong on the long-term charts, on the medium-term charts, and the short-term charts it's formed a base. Because somewhere in the region of 500, 510, that's a very strong base for this stock. And it's bounced back and currently trading around 537, 538 levels. So it appears that the stock could rally further. So any pullback towards 520, 25 can be a good buying opportunity with a stop loss below 500 and a target somewhere in the region of 575 to 580 on the upside.
Diwan Housing, Navneet, up over 8% over the past month or so.
Okay, that's about Divan Housing. Let's move on and take our next query. This one comes on Facebook. Samiran Das says he's bought 1,000 shares of Karnataka Bank at a price of 131. He's got a 3-month view. He's asking if he should hold or book losses here. The current price is 125 and the buy price is 131. Amar, I'll come back to you. Since he has a 3-month view here, what would you advise him to do? Can he hold on because the current price is below his buy price? Do you think he can get back the price of 131?
Yeah, looking at Karnataka Bank, what we're seeing is that the stock took a very strong support somewhere in the region of 110 levels or so. And from there, it has bounced back, I would say, short covering and also being around crucial support zones. That's really helped the stock. But what we're seeing is that the medium-term trend for the stock, that remains a negative. But since it's in oversold territory, so there is a possibility of the stock bouncing back further. The only level that he should watch out is 128. It's currently around 125, 126 levels. So if the stock sustains above 128 levels, then the stock is headed higher towards 138, 140 levels, and he could be in some profit. So ideally, if he wishes to hold his position, then he should have a stop loss below 119 and wait for the level of 128. If that is taken out on the higher side, he could witness the stock rising towards 138, 140 levels.
Let's take the next query. This one from Ramakrishnan Ranganathan on WhatsApp. He wants to know what the views are on Aurobindo Pharma and ITC. ITC, of course, an evergreen company. Aurobindo Pharma in the year-to-date period has lost about 11%. Parthiv, the investor seems to have chosen these two particular stocks based on research that he's done. What's your view in terms of these two counters? And should he essentially hold for the long term?
See, I think if it's a new buy, firstly talking about ITC, this is a very, very resilient stock. And I feel that I think they're doing all the right things. And I think definitely the FMCG business also, thanks to the good traction that we're seeing in the rural market and all the premium products that they have launched, I think they're seeing a reasonably good traction, which should help their FMCG business. But again, I think the market will tend to see the main business, the cash cow business, which is the cigarette business. And if they're able to maintain reasonably good volume growth numbers and margins, quarter-on-quarter, we have been seeing that they are able to maintain that or even try and improve them. So I think margin should not be a worry, but if they can show some good performance in the volume business, then I think definitely the stock will move in that range, where on the downside, it takes a very good support at around 250 levels, and on the upside at around 270, 280 zones. So I think if one has a long-term view, 3 to 5 year view, one should not worry, buy it out here, and this will be a stock which will compound well by 15 to 18% going ahead. So we have beat on ITC for the longer horizon. Talking about Aurobindo Pharma, I think in pharmaceutical sector, one will have to be a little selective, because I think names like Aurobindo Pharma, which were resilient, but of late have corrected a lot, and especially they don't have any blockbuster products. So their A&D pipeline has many products, but very small in size. And these products are facing a lot of competition because of the faster approval rates from the US FDA. So we're not very upbeat in terms of the future performance, especially in terms of the margins that they can show. So in that case, I don't see any major trigger which can re-rate the stock. Vis-a-vis Aurobindo in the mid-cap pharma space, I would suggest a stock like Cadila Healthcare. Again, this stock has a fantastic ANDA pipeline, Topanol and Lialda generic, which has been approved. They definitely will give a lot of enhancement to the earnings and the margins of this company. Plus, they have 3 to 4 more products which has limited competition and 129 ANDA products. So I think they can easily launch 10 products every quarter. So the momentum is absolutely there. So I would prefer Cadila over Aurobindo Pharma.
Okay, so Parthiv prefers Cadila over Aurobindo Pharma, and he also feels ITC can be, if somebody is holding ITC, you can look to hold on for the next 1 to 2 years. But as he highlighted, volume growth from the cigarette space remains a key metric to be watched out for this company. Let's get to our next query, and we've got Peter Paul, who's calling us from Andhra Pradesh with a query. Hi, Peter. First of all, thank you very much for calling us. Tell us, what do you want to know from our experts?
Madam, I have working just at 230 average.
Okay.
Should I hold or not? What is the fate of the stock?
Peter, how many shares are you holding of Vakrangi?
910.
910. Any reason for buying into this counter, and when exactly did you buy?
No. General for investment purpose, I hold this.
But before buying into Vakrangi, did you do any research or you just bought because the stock's corrected?
No, corrected. Yeah.
Okay, all right.
Okay.
Parthiv, I'll come to you. Well, I'm sure a lot of retail investors like Peter would have bought into Vakrangi, and the reason being because the stock's corrected from its higher levels of 550 or thereabouts. In fact, for this year itself, it's down nearly 60%. He's bought at higher levels of about 230. Current price is 160, and every day it's been locked in lower circuit of about 5%. What would you advise him? Is it worth waiting, or you should just exit and buy into something else?
I would definitely suggest exit at whatever next instance is possible, because we had discussed this stock in the past, Navneet, and that was a main concern, that the stock had huge gyrations in terms of the movement, and that is, first thing, is not at all a healthy sign for any retail investors to own such very volatile stocks. And probably I think there is some SEBI inquiry for the company. They're talking about a business model which is kind of invincible. Even at current juncture, if you see the market cap based on what the company is into, kind of is still not very comfortable in terms of how the company will do going ahead. And whenever there is any sort of corporate governance related issues and SEBI is involved in terms of the gyrations in the share price movement, there are people who are exiting lock, stock and barrel, continuous days of lower circuit, then some upper circuits. These are not the type of stocks that the retail investor should hold. I would certainly suggest the gentleman to exit the stock. And if in mid-cap IT, if he is looking for a good, nice investment play, then I would suggest Majesco, which is into the insurance vertical, getting good hold of tier 1 insurance clientele, which will definitely help them to have a good run rate in terms of the volume growth and good revenue growth along with better margins going ahead. So I think Majesco can be a stock which can really give very good returns over the next 3 years. So I would prefer that over Vakrangi.
Okay, that's the view coming in on Vakrangi. Peter, if you heard Parthiv, he's suggesting to get out of that counter, and probably you can look at something like Majesco. Well, on that note, I would like to thank both our guests. Thank you very much, Amar and Parthiv, for helping our viewers with your queries. Well, that's all that we have on this edition of Ask BQ.
But do remember that we're just a tweet, post or call away, so do keep your queries coming in, and we promise to address as many of them as possible through our shows. You can also log on to the website bloombergquint.com and search for the hashtag AskBQ and get answers to all the queries that were discussed on this particular show. Up next is Power Lunch, so do keep watching. This is Bloomberg Quint.